So the most fundamental premise is Bitcoin is digital capital, and a lot of the traditional finance establishment doesn't understand capital. And so they don't recognize a capital asset when they see it. So we're acquiring Bitcoin as capital the same way that you might acquire 3% of Manhattan. So say you believed in Manhattan and you go and you buy up 3% of all the raw land in Manhattan, right? They would call you a Manhattan real estate hoarder. But it was never our intention to hoard the real estate in Manhattan. It was the intention of people that bought up Manhattan to develop a great city. And eventually you build buildings on that real estate, and the buildings have cash flows, and those are credit instruments. So our company believes Bitcoin is cyber Manhattan, right? It's a place that one day everybody on earth will want to put some of their money. We think it's the greatest city in cyberspace. It's the greatest digital property. Just like if you go to Manhattan and you ask people that live in Manhattan, they think that their city is the greatest city, not just in America. They think it's the greatest city on earth, and people have been buying Manhattan real estate since 1650, every decade for 300 years, and they keep paying more than the previous decade paid, and it's never been a bad idea to buy Manhattan because it is the greatest city. So, but no one ever called a Manhattan real estate developer a land hoarder, I don't think. Maybe they did, I don't know. But you know, we think that Bitcoin represents the apex property of the human race, digital property. And our rationale is, if it is the apex property in cyberspace, it represents economic spectrum. It's like, you know, once upon a time, people bought up all of the radio broadcast rights over the United States. And, you know, you might have called them, you know, spectrum hoarders. But, you know, without the spectrum, there would be no AT&T or Verizon. You can't have mobile phones. So you need the spectrum. And so we view Bitcoin as like economic spectrum. And we think it's just going to get more scarce and more valuable over time, because there's a lot of money in the world, and as people want to move their money in cyberspace, either through cyberspace or into cyberspace, they're going to want to buy up that spectrum. We're just believers. Again, just like if you ever met someone in Manhattan, you ask them if they're ever going to sell their apartment, they're like, sell it for what? Like literally, people that have a nice piece of real estate in Manhattan will say, I'm giving it to my heirs, and they'll give it to their heirs. It'll be in the family for the next 100 years, because every place on earth is a step down. And all you got to do is go talk to someone that's a big New Yorker, you'll hear that over and over again. So our view is, yeah, this is the apex property, so we're going to develop it and we're going to enhance it over time, but no, we're not really looking to sell.
So today you announced another acquisition, another purchase. I think it was about 10,600 Bitcoin. And when you announced on a Monday, though, that doesn't mean that you bought it Monday. That means it could have been from the last week or so, correct?
Yeah, we normally announce those things over the course of a week. So on Monday morning, we'll announce what we did in the previous week. This week, we announced, you know, something like, what, $960 million worth of purchases. But a week ago, we also announced about 950 or 960 million in purchases. So about $1 billion a week for the past 2 weeks. So this announcement was everything we did Monday through Friday of last week.
So what factors do you consider when making these purchases?
We buy Bitcoin whenever we have money. Only buy Bitcoin with the money you can't afford to lose. So this is the 90th purchase. And so we've done it 90 times. It's a very simple way to think of it. So Bitcoin's been going up about 45% a year for the past 5 years. I expect it to go up 30% on average for the next 20 years. It was going up 80% on average 5 years ago, so it's decelerating from 80 to 70 to 60 to 50 to 40, and it should continue to decelerate, you know, towards something like 1.5x the S&P. And so it's not hard to get to a forecast of about 30% over 20 years. But that being the case, the way I think about Bitcoin is it's a digital monopoly on capital. It's the world reserve capital network that's growing 30% a year that you can purchase at 1 times revenue. So if you're the CEO of a company and I came to you and said, I have a monopoly that's growing 30% a year for the next 20 years, and you can buy it at 1 times revenue, the question is, would you do the deal? And of course, the answer is everybody would do the deal, right? If anybody ever said, I have a company growing 30% a year for the next 20 years, and they'll sell themselves to you at 1 times revenue, you're like, well, why are they so stupid? Like, no one's ever that stupid. The last time Google bought a high growth company, they paid 27 times, 30 times revenue, 10 times revenue. Normally you pay 10, 20, 30 times revenue for a high growth company. So a high growth company that'll sell itself at 1 times revenue is a pretty extraordinary deal. Now, for us though, it's a much simpler decision. It's not just a monopoly growing 30% a year for the next 20 years that we can buy at 1 times revenue. We can buy it risk-free. Okay, well, why can I buy it risk-free? Because my company is constructed for Bitcoin maximalists. The only people that buy my equity are people that believe Bitcoin is going to win and is going to grow 30% a year. If you didn't think Bitcoin was going to grow faster than the S&P index, there's no way you would buy MSTR. Okay, if you thought, that might have been a debate back in 2020, but after the company bought Bitcoin 89 times in a row, if you're still holding the equity, you have to believe in Bitcoin. So when we buy Bitcoin, we've already stripped the existential risk off of the investment. What matters is not whether anybody else in the world thinks Bitcoin is risky. What matters is, do my equity investors think Bitcoin is risky? And so I'm doing an acquisition which is by definition accretive without risk, and I'm getting the deal at 1 times revenue, right? And we're creating a very transparent credit profile, a very transparent performance profile, and that means that our hurdle rate is 30% risk-free. So, if you were to pitch me anything, if you said, I have the best startup idea ever, I guarantee you 40% a year for the next decade, I would think that's not as good as the deal I have buying Bitcoin. You could promise me 50% a year for the next 20 years. We wouldn't do the deal because I would have to convince 100 outside equity investors that your deal is better than Bitcoin, and I wouldn't be able to convince them, number one. But number two, it would be a dilutive distraction. So we have a very simple business model. It's just we just buy Bitcoin. We expect 30%. We know it'll be volatile. It'll be 30% with 30 vol over 20 years, and right now it's 40, 50 vol. And if you have the ability to just keep doing the same trade over and over again, it makes sense. You could think of it as, maybe one of the all-time great roll-ups where you're just rolling up, a digital asset with a limited supply, and every time you buy a bit more, there's that much less supply in the market, the scarcity goes up. The risk doesn't go up because, let's face it, if Bitcoin goes to 0 tomorrow, it doesn't matter whether I own 1% of it or 2% or 3% of it or 0.5% of it. It's irrelevant, right? I mean, it's kind of like back to the Manhattan example. If you've decided you believe in Manhattan and you bought 1% of Manhattan, you might as well buy 2 or 4, because if Manhattan sinks under the ocean, you're going to be bankrupt regardless, right? There's nothing you can do if Manhattan sinks, beneath the earth. But, once you've accepted that as the systemic existential risk, and your opinion is Manhattan is not sinking beneath the ocean, then, you've already got a basis, in the city. You've already managed the rest, and the least risky, most accretive thing you can do is just continue on your strategy. We discovered Bitcoin during the COVID lockdowns when the world turned upside down and interest rates went to 0. And I would liken it to, say you owned $500 million of real estate in a city, and there was a pandemic and the mayor took over, and the mayor decided to reduce all rents to 0 forever for the public good, and then just sent you a memo saying, we expect you to accept 0 rents on your building forever because otherwise you're a bad citizen. And if that happened to you, and if the building was still worth $500 million, you might think, I'm going to sell the building and move to another city where I get respected a bit more because this is offensive, right? Or you could stay in the city and accept 0 forever and go bankrupt and then people will just ridicule you for being stupid, and you went bankrupt and you probably deserved it. So we got to that point, and I thought, well, you know, the cost of capital went to zero. Jerome Powell literally said, we're lowering interest rates to zero. I'm not even thinking about raising interest rates for 4 years. Like, you go see the press conference. So at that point, I had 500 million, and I thought it's either a fast death or a slow death, or we're going to have to move, take a risk. We're going to have to transform ourselves and fight our way out of this. So we decided to take our 500 million and buy something where it wasn't rent controlled to zero. And we started looking for a capital asset that was not already highly appreciated. And what I wanted was something like gold, a cross between gold and a monopoly, on a digital monopoly. So I wanted like the Facebook of money, or I wanted Google for money, or Microsoft for money. The best investment ideas have been these the FANG stocks, now Mag 7 stocks, but FANG, Google, Apple, Facebook, Amazon. I thought, can I actually buy a digital monopoly on capital? And Bitcoin looked like the best aspects of Google or Apple, and it looked like the best aspects of gold and a non-sovereign store of value bearer instrument. And I thought, I kind of like the idea of you have portable capital. I give you $1 billion, I drop you in Africa, and I say, buy anything you want, you got to hold it for 30 years. There's not a single thing you would buy in Africa. Not a company, not an index, not a credit instrument, not a currency, nothing. And you wouldn't buy $1 billion in gold because they wouldn't let you out of Africa. They'd steal the gold, right? And so the issue is, what are you going to buy where you need to move the capital asset, right? In the Middle Ages, the Renaissance, people bought art. You know, they bought very, very valuable art from the Italian masters, and they bought it so they could run for their life when they had to flee the city-state, when they were the minority. So the struggle for portable property goes back, you know, thousands and thousands of years. It's always been a human problem. So we thought, you know, Bitcoin looks like portable property, but it was digital, and if I had gold. And gold was like portable capital for thousands of years. Like, everybody agreed that gold was capital for thousands of years. Even people that wanted to kill each other and hate each other, and they couldn't agree on anything else, they could agree that they wanted to kill you for your gold. Which, by the way, is it's a big deal because, you know, in South America, when the Spaniards show up, you know, the Aztecs, the Incas, they didn't actually think of gold was money. The Spaniards did, and they brought the gold back to Europe, where everybody the Spaniards wanted to kill also agreed it was money. And so it was a big deal that people agreed that gold was money. But if you had a genie and 3 wishes, and you said, how do you make gold better? You would say, well, you know, first I want to make it impossible to mine any more gold and cap it at 21 million gold coins. And then you would say, I want it to be weightless, invisible, and I want to be able to teleport it. And then the third ask would be, I want to make it programmable so the billion AIs can transform it 1 billion times an hour and send it to another 1 billion computers, and I can put it on 8 billion iPhones and Android phones because that way everybody is going to have this powerful thing, and maybe it'll transform itself in 3,700 iterations over the weekend and make you a lot of money. That's not going to happen with gold. It's not going to happen with real estate. It's not going to happen with soybeans. It's not going to happen with art. It's not going to happen with credit portfolios and security portfolios. So I thought, you know, a digital monopoly on capital asset, we're going to take our 500 million, we're going to buy it. And it was first we were, I would say, was out of desperation and frustration. It's like someone told you you're going to die, and you're like, okay, I guess I will flee for my life with whatever I can take. And then it became opportunistic, because the stock tripled, volatility went through the roof, and we could borrow money for free. And so if someone wanted to give you $1 billion for free for 5 years to, you know, invest in your business, would you take the money? Yeah, it's like after we were just about to go, you know, out of business 6 months earlier, we thought, okay, now someone's going to give us $1 billion for free. We're going to go buy Bitcoin with this money. So then we became the biggest issuer of convertible bonds in the world, and we issued like, you know, $10, $12 billion of them, and we worked that. But ultimately, I would say that was the opportunistic phase, and in that phase, the product was the equity, and then the tactic was the credit.